All right, thank you, Chrissy, and welcome everyone to our 2018 Yellow Book update. As always, this is an interesting time of year. Normally, we don't have to do this on an annual basis. However, this year, we were given a gift over the summer. We were given a new Yellow Book. So the 2018 revision was released. It came out last year as an exposure draft, and we were looking forward to the opportunity to share some of the changes with you. Now, it's not effective yet, so don't worry, but what we wanted to do was talk to you about some of the things you might need to consider as you work with your auditor and the relationship with your auditor as we go forward. So very, very excited to be with you guys today. All right, so let's fast forward through that slide. So for those of you who don't know me, my name is Melissa Galasso, and I am in the Audit Professional Practices group at Bekaert, and I am out of their Charlotte office. But I'm actually sitting today at the AICPA in Raleigh in a very, very large room all by myself. So I'm kind of excited to have so many people here with me to hear about this Yellow Book update, because I am literally in a huge conference room all by myself to give you this webinar. But more importantly, with me today is Megan. Megan, can you introduce yourself to everyone?
Good afternoon, everyone. My name is Megan DePace, and I am a manager with Bekaert. I am located here in the Tyson's office. I've been with the firm for about 6 years now, and kind of my client base is geared around local governments and authorities.
All right. Well, we are excited to have you with us, Megan, as we dive into some of the material today to give an introduction to the group. So before we dive on in, we always like to start off with our learning objectives. One, NASBA requires that we have learning objectives, but two, it's always important to know what you're supposed to get out of today's class. So what are attendees supposed to learn today?
So the learning objectives for this webinar today are to list the changes in the 2018 year, as well as state the effective dates of these new standards. So the overall goal for today is show you guys the significant changes within the new Yellow Book and how this can impact you going forward.
All right, and that effective date is super important because when we're thinking about the effective date, it's going to have an impact on, while it's not effective until an end of a period, it actually starts with the independence rule at the beginning of that period. So that's why we wanted to talk about it now. All right, so that brings us to our first polling question, and as you can see here, it's a pretty easy one here. We've got a state government, local government, public university, public school, university, other government, not a government. I don't see nonprofit on here. It must have gotten, I think, unfortunately, GoToWebinar only allows us 5 options, and so if you are a nonprofit, I apologize that you don't have a place to go besides not a government. So vote proudly if you are a nonprofit. We love to have our nonprofits and our governments on our Yellow Book update. So vote proud, and your choices, again, you want to make sure that you are clicking as we're going through. So super helpful as we push through here. All right, it looks like we have enough responses at this point. So let's push out the results here to me. Oops. All right, so we've got about 12% of you coming from a state and 36% coming from a local government, and then 24% from a public school or university, and 23% not from a government. So excited to have you guys with us today. All right, so let's keep pushing on here. And the first and most important thing is very often we don't teach Yellow Book to our friends in industry. And one of the reasons why it is an auditing standard. However, it's very important that when you're being audited under Yellow Book that you understand what the auditor is required to do, but also really have a perspective on how that makes your audit different than a standard gas audit. So Megan, what is Yellow Book and how is it relevant to our lovely clients and friends on the line?
So the U.S. Government Accountability Office, or the GAO, publishes this book called the Government Auditing Standards. And this is the GAO's kind of how-to book for auditors, which is better known as the Yellow Book, and also commonly referred to as the Generally Accepted Government Auditing Standards, or GAGAS. So it was last revised in 2011 until these new revisions came out in July of 2018. And the Yellow Book provides a framework for performing high-quality audit work with integrity, objectivity, and independence to provide accountability and to help improve government operations and services. So they provide the foundation for government auditors to lead by example throughout the entire audit process. The Yellow Book is principally used. Oh, sorry.
Go ahead.
The Yellow Book is principally used by those that receive federal funds or by anyone who is required to by law regulation to follow the Yellow Book. So this really impacts your federal environment, your state and local environment, and as Melissa mentioned, a fair number of nonprofit organizations also follow these standards.
All right, and Yellow Book is an add-on. It is not a replace, and so when an external auditor is performing an audit under Yellow Book, they have to follow the generally accepted auditing standards issued by the AICPA and Yellow Book. And so there are various requirements from state to state. Some states actually have a requirement that if you receive state funding, you can be required to have Yellow Book. If you receive enough federal funding that you need a single audit, that requires a Yellow Book audit. So there are different triggers depending on what state you're in or how much federal funds you receive as to whether or not you get a Yellow Book audit. How would they know if they get a Yellow Book audit, Megan?
Kind of like I mentioned, it would just be kind of anyone who is required by any law or regulation to follow that Yellow Book, which I had mentioned is usually your federal or your state, your local government.
All right, and if you're not sure if you are getting a Yellow Book audit, you should look at your engagement letter because it will specifically say it is going to have a Yellow Book audit. It will mention, however, not Yellow Book, it'll use the term government auditing standards issued by the Government Accountability Office. So that is the easiest way to check to see if you are subject to Yellow Book. All right, so let's dive on into some of these materials here and kind of take a look. So not everything changed in Yellow Book, thankfully. So what were some of the areas that had the most significant changes?
So within the new Yellow Book, there was about 5 significant changes that we were going to discuss with you guys today. The first significant change was kind of within the structure of the Yellow Book. It kind of now has a new format that differentiates the requirements from application guidance. The second significant change is related to independence. There was an update to the independence requirements for auditors who prepare the financial statements for an audited entity. Another major change is related to peer reviews. The Yellow Book revised the peer review requirements for audit organizations not affiliated with a recognized organization. The fourth major change we're going to talk about is related to waste. The new Yellow Book includes new guidance to address waste and abuse as defined under their government auditing standards. And then the last significant change we're going to discuss is the CPE requirements. And although there was no real change to the actual CPE requirements themselves, the structure and the format of the CPE standard has changed along with additional guidance on those CPE requirements.
And while these are not going to be material changes to you in terms of CPE, the app and structure, right, those are really going to be for your auditor. We want you to be aware of them, but we're going to focus today on the ones that you should be aware of, especially your independence relationship with your auditor, the reporting of waste, and then obviously peer review, because as part of the single audit requirements, obviously the requirement to know the status of your firm's peer review is very important. So we'll talk a little bit about some of those requirements. So, all right, so let's dive on into structure, which is the first area of our significant change, and just kind of give us a high-level overview here. Clearly, we don't expect our clients to go out and read the Yellow Book, but what would be different if they were to take a look?
So the new Yellow Book, the GAO kind of used a new format that was designed to allow auditors to quickly identify requirements and application guidance related to those requirements. The government auditing standard requirements are now differentiated from the application guidance by a box surrounding the text of those requirements. And along with that, they have also added appropriate titles that clearly states if the following information is a requirement or if it is application guidance. So if you're looking at the slide, on the left-hand side was the old Yellow Book, which you can see was just straight text. And there was no clear structure or any defined requirements. And then on the right-hand side, you can see the new Yellow Book, which clearly identifies the requirements in a box that is immediately followed by the application guidance that is directly related to those requirements. You will also see the new bold headers that clearly states what is a requirement and what is application guidance. So as far as the structure of the Yellow Book goes, it was essentially all text in the 2011 version, and now in the 2018 version, it is text with a little more direction to it. So I keep kind of mentioning this application guidance. So what is that? The Government Auditing Standards contains requirements together with related explanatory material in the form of application guidance. So the application guidance is there to provide further explanation of the requirements and guidance for applying them. So for example, the application guidance may explain more precisely what a requirement means or what it intends to address. It could also give you examples of procedures that may be performed in a particular circumstance, or provide background on information on matters addressed in the standard. So although the application guidance does not in itself impose a requirement, it is relevant to the proper application of those requirements. So it's important to keep in mind that not everything, or not every paragraph within the Yellow Book contains a requirement. And there was one other change within the structure to the Yellow Book. They also went through it and kind of reorganized and realigned the chapters. So it was previously 7 chapters with an appendix that provided supplemental guidance in the old Yellow Book, which has now been reorganized into 9 chapters with no appendix. So the supplemental guidance from the appendix in the old Yellow Book has either been removed completely from the Yellow Book or has been incorporated into the individual chapters of the Yellow Book.
All right, and again, we're not expecting you to go research anything in this area, but what we would say is a lot of times someone say, why do you have to do that? And very frequently we'll give a citation and people aren't familiar necessarily with Yellow Book. And so when it's a requirement, it is a must, meaning we don't have any choice in the matter. And sometimes that can be, helpful for someone to understand. Very similar to the audit standards, we have musts and shoulds. And if it's a must, Yellow Book is going to require that in a given audit. So that can have obviously an impact on entities as they're going through it. All right, so let's keep pushing on. And the next one is probably the most important area that we wanted to talk with you guys about today, because the independence rules are changing and they're just being clarified a little bit, but it can have an impact on the relationship that the auditor has with their auditees, especially in the area of financial statement preparation. And so as a result, we wanted our clients and our friends to be aware that this change may have an impact as we go into engagement letters for 2020. As we're writing them in early 2019, we might be having conversations about some of this, and we wanted you to know where it came from. Again, independence rules apply to the auditor, but they really impact the auditee, because the auditee has to understand why the auditor is doing what they're doing in terms of trying to maintain this level of independence. So let's take a look here at some of the big areas and sort of the overall concept of independence, and then how we're going to kind of go into some of the changes.
So kind of like...
So I'm just going to prep you on this one. So here we have what we call a threat. And inside of Yellow Book, similar to inside of the AICPA standards, they actually tell us what there are in terms of threats. And there are various categories that we have to identify when performing an audit for clients. And under Yellow Book, they're not actually the same threats that are under the AICPA standards. So why don't you give us a little background on these threats and what auditors have to consider when they're trying to decide if they can perform an audit and maintain their independence?
Okay, so like Melissa mentioned, a lot of this requirements hasn't really changed a lot from the prior years. It just kind of has added some application guidance for the auditors to consider when they are going through their independence. So the application in Chapter 3 of the Government Auditing Standards approach to independence has discussed these 7 threats that you see on the slide. So there's a self-review threat, there's a self-interest threat, a self-bias threat. So whatever any other services that your auditor does perform, we have to consider if there is a threat to independence when we do that along with the audit. So in the old Yellow Book, they kind of had listed out these threats. They didn't really tell you a whole lot about them, but expected us to kind of evaluate them. So in the new Yellow Book, they have taken those threats and have provided us detailed examples of them. So they kind of go through and have identified for these 7 threats about 5 or 6 examples of circumstances that would pose a threat to independence. So, for example, a circumstance that creates like a self-interest threat that was provided in the new application guidance and the standard is would be a member of the audit team entering into an employment negotiation with the audited entity. Or another example for you that would create a self-review threat is an audit organization has prepared the original data used to generate records that are also the subject matter of the engagement themselves.
And as you can see here, there are some threats that are really very specific to the work in a yellow book environment. One of them is a structural threat. As you guys are probably aware, depending on your state auditor may be either elected or appointed, and very frequently they sit inside of the audit entity that they're auditing, right? So the state auditor's office audits the state, and they're employed by the state. So that creates obviously a structural threat. In an external environment, we are obviously not allowed to be employed by our clients, and so that threat does not really apply to an external auditor as much. In addition, bias threat is unique to the yellow book world. A bias threat obviously has to do with more of the politics that you see in a governmental entity that you would not necessarily see in a commercial entity. So I live in the state of North Carolina, and our state auditors actually run on a political platform. So you run a Democrat against a Republican, and that is a known knowledge. And so it could be that the state auditor is from one political party, and it is different than the audit organization elsewhere. So that's something that we should be aware of, is a little bit unique in the political environment that we work in. That can be in here. But most frequently, what we focus on in the external world are that self-review threat, making sure that we don't audit something that we did ourselves, and also management participation threat that we really try not to, or we don't, because management participation threat is something that would cause us not to be independent, ever step into a management role, and we always maintain our role as the auditor. So here is a really fun determination here from paragraph 372. So why don't you give us a little bit of the definition and tell us what that means?
Okay, so paragraph 3.72 says that audit organizations and government entities frequently provide services that differ from the traditional professional services that an accounting or consulting firm provides to or for an entity. So these types of services are often provided in response to a statutory requirement at the discretion of the authority of the audit organization or to an engaging party such as a legislation oversight body or an independent external organization rather than the responsible party, and would generally not create a threat to independence. So this standard is providing guidance on non-audit services that generally do not create a threat to independence. After this application guidance, the standard provides a list of about 10 examples of these non-audit services. So some of these examples are providing training, speeches, and technical presentations, or providing assistance in reviewing budget sections, or developing questions and answer documents to promote understanding the technical issues of standards. So these examples would generally not create a threat to independence. So the biggest change here within the standard was, again, just kind of providing additional application guidance to help apply the standard requirements.
All right, so like today, many of you on the line are our clients at Bekaert, and obviously educating you is not going to violate our independence. We are encouraged to provide these value-added services as part of our audit so that you are up to date on what's going on out there. And so there are some things that are, while they're not audit related, can actually be beneficial to the client and would not have a violation. All right, so let's keep going into this independence area. And let's talk about management's responsibility.
So another example kind of where the new standard has provided more application guidance is specifically related to the management's responsibility of the non-audit services that auditors could perform for you. So one of the requirements for management's review or management's responsibility over non-audit services that is specified in paragraph 3.73 says that the auditor should determine that the audited entity has designated an individual who possesses suitable skill, knowledge, or experience, and that that individual understands the service to be provided sufficiently to oversee them. So like I mentioned, this is not new to the Yellow Book. It's the same requirement that was in the 2011 Yellow Book. But again, what is new is that they've kind of added additional application guidance to kind of help apply this requirement. So on the right-hand side of the slide, you can see in paragraph 3.79, the application guidance that they provided says that indicators of management's ability to effectively oversee the non-audit service includes management's ability to determine the reasonableness of the results of the non-audit service provided and to recognize a material error, omission, or misstatement in the results of the non-audit service provided. So the focus here on this guidance is really to evaluate the individual overseeing the non-audit service and making sure that their skills, knowledge, and experience are adequate and that they can properly oversee that service. Like the standard mentions, the individual overseeing the service does not need to be able to re-perform that service per se, but they do need to have the competency to determine the reasonableness of the results and have the ability during that oversight to recognize if there was a misstatement or a material error.
So you've probably been asked if we prepare your CIFA or if we perform one of these non-audit services that are subject to Yellow Book. We've probably asked you about your capabilities, your experience with financial reporting, your background, in order to be able to indicate that you have that skill, knowledge, and experience to provide this oversight. And so sometimes people ask, like, why do you need to know where I go to school? Or why do you need to know how many years of experience I have? Well, a lot of times it comes down to our ability to document that you have the skills, knowledge, and experience in order to be able to perform. And so, and again, not to be able to actually do the service, but be able to oversee the service and ensure that it's being performed properly, especially the preparation of the CIFA probably being one of the biggest ones we see in a single audit world. All right, so let's move on. So this looks overwhelming, but Megan is going to make sure that we have an amazing opportunity to really walk through it. But this is a methodology that the GAO has incorporated here to help us as auditors determine, can we actually perform the service that you have requested? And so I'll let her kind of walk you through a set of slides here.
This flow chart, like Melissa mentioned, is kind of just to make in picture form kind of those independent standards that we were just kind of talking about. This flow chart was provided in the old Yellow Book. What they kind of did was revamp it a little bit to this presentation, but it's relatively the same. So to start at the top of this flow chart, the very first step is to evaluate circumstances for threats to independence within the engagement. If there was no threats to independence, then there is no further action necessary and the auditor can proceed with that engagement. If there is a threat identified, then the auditor would need to determine if that threat is related to a non-audit service. If the answer to that question is no, then the auditor would evaluate the significance of that threat. So one of the requirements in the standard says that when an auditor is evaluating a threat for significance, that they should evaluate both qualitative and quantitative factors related to that threat. If the threat is not deemed to be significant, then there is no further action necessary and the auditor can proceed with that engagement. If the threat identified is significant, then the next step would be to identify and apply safeguards. The safeguards are defined in the standard as actions and other measures that auditors take that effectively eliminate threats to independence or reduce them to an acceptable level. So therefore, safeguards can kind of vary depending on the factors and circumstances within that service or engagement. The application guidance has also provided some examples of safeguards within there as an application guidance for us. So some of these examples would be involving another audit organization to perform part of the engagement, or another example would be having an auditor who is not a member of the engagement team review the non-audit service work that was performed. So once those safeguards have been identified, the next step is to assess the effectiveness of those safeguards. If the safeguards that were applied eliminate or reduce the threat to an acceptable level, then the auditor would document the threat and safeguards that were applied and they would be able to proceed with the engagement. If those safeguards did not eliminate or reduce that threat to an acceptable level, then the auditor's independence is impaired, and therefore they should not proceed any further. So they would need to decline to provide that service or terminate the engagement. So now if we go back to the top of the flowchart and the auditor has evaluated a threat to independence that is related to a non-audit service, then they would need to determine if the non-audit service impaired independence per the government auditing standards. So what does that mean? So within the government auditing standards, the GAO lists non-audit service that would impair auditors' independence regardless of the situation. So some of these services include assuming management responsibility, making or approving business risk decisions, or hiring or terminating the audited entity's employees. So if the auditor performs any of these non-audit services or any of the other services listed within the standard, the auditor should conclude that the non-audit service impairs their independence. So if they have determined that it does impair independence for the government auditing standards, like I mentioned, we should not proceed any further with that service. If the non-audit service does not impair independence for the government auditing standards, then the auditor would need to ask, was the non-audit service requested by the audited entity's management? If the answer to this question is no, then the auditor would need to evaluate the threat for significance and follow that same path we previously discussed for a no answer to threats related to non-audit services. However, if the non-audit service was requested by management, then we would need to evaluate if management has suitable skills, knowledge, and experience. This is what we previously discussed on the previous slide, where auditors really need to be evaluating the individual overseeing the non-audit service and making sure they do have the suitable skills, knowledge, and experience, and that they can effectively oversee that service. If the overseer is determined to not have suitable skills, knowledge, or experience, then independence is considered to be impaired, and the auditor should not proceed any further with that engagement. If the overseer does have suitable skills, knowledge, and experience, then the auditor should document all of their considerations in their audit work papers, as well as document the understanding of the service to be provided with management. Then the auditor would need to see if the non-audit service involves preparing accounting records and financial statements. If yes, then this flowchart states to see Figure 2. So as Melissa kind of hinted at, this Figure 2 is new to the 2018 in Yellow Book, and this is the flowchart that shows the independence considerations for preparing accounting records and financial statements. The new standards kind of added new requirements and application guidance related to these services, and therefore they've also added a new flowchart for additional guidance in applying these requirements. So we are going to discuss those requirements separately in a little bit. So if the non-audit service is If the non-audit service is not related to preparing accounting records and financial statements, then the auditor would need to evaluate the threat for significance and follow that same path that we previously discussed for no answer to the threats related to non-audit services.
All right, so I know that probably looks scary, and I think obviously we've tried to break it down, but the question that we have to ask ourselves over and over again is, can we perform this service and do it in a way that people can rely on it? At the end of the day, if your auditor looks like they're really just part of management, then people aren't going to trust the audit report, right? The whole importance of having the CPA be independent allows us to be able to rely on that report. And so as we go through this, what we're looking for is that documentation. So you're going to see a lot of focus on making sure that we're able to truly document that we meet these independence standards. And we're going to ask for your help in doing that, that we are able to really document your knowledge and your skills and what you've done in the past and how that applies to being able to oversee us, or really help us document the threats and the significance and how we're going to overcome them. We will be talking to you about that, and it's a really exciting opportunity for you to be really part of ensuring that we keep that quality control so that you can really rely on our audit and that we're doing a great job. And for those of you who are friends of the firm who maybe don't have us as an auditor, we would love you to think about that for your firm that's performing your audit, that they're giving you that high quality independent service as well. All right, so I know that was a little overwhelming, so let's keep pushing through here and talk a little bit about the preparation of financial statements. And this includes things like preparing the CFA, preparing the CAFR. Just think about all the things that we do in the government and not-for-profit world that, that the auditor may prepare. Let's talk a little bit about how this could have an issue for auditors as well as obviously the auditees and what we can do about them.
So within the standard, specifically for independence in preparing financial statements or accounting records, the Yellow Book has identified 4 requirements that we would need to abide by. So the first requirement is here on the slide for you, which is in paragraph 3.87. And this is essentially saying that auditors should conclude that there is that independence is impaired if the audited or if any of these 3 services are performed. So the first service is determining or changing journal entries, accounting codes, or classifications for transactions or other accounting records for the entity without obtaining management's approval. The second service is authorizing or approving the entity's transactions. That service is preparing or making changes to source document without management's approval. So again, this first requirement is focused on services related to preparing the financial statements that impair auditors' independence regardless of the situation. So once the auditor's independence has been prepared, they should not proceed any further and decline to provide that service or terminate that engagement.
And so as you can only imagine, throughout the audit, your auditor might find something that's an error and propose a journal entry, but it's always that, it's a proposal. If they start booking journal entries without management's approval, that's when you start getting into the area of impairment. And so if you're impaired, you can't perform an independent audit because you're no longer independent. And so that's really what we're trying to focus on here. All right, let's move on to our next paragraph that has the concepts here for the auditor.
So the second requirement for related to independence in preparing financial statements is in paragraph 3.88, and this reads that the auditor should conclude that preparing financial statements in their entirety from a client-prepared trial balance or underlying accounting records creates a significant threat to auditors' independence, and should document the threat and safeguards applied to eliminate and reduce threats to acceptable levels or decline to provide the service. So this is one of the new requirements in the Yellow Book and one of the biggest changes that we are going to see. This requirement is essentially saying that if the auditor prepares the financial statements in their entirety, then we can skip that step in the conceptual framework where we evaluate if the threat is significant and go straight to the step of identifying and applying safeguards, since this standard is already telling them that performing this service poses a significant threat to independence. So auditors are going to have to start thinking about and making sure that they're accurately documenting and the additional safeguards over this significant threat to make sure that those safeguards eliminate or reduce the threat to an acceptable level in order to proceed.
All right, so let's keep moving through the requirements.
So the third requirement related to preparing financial statements says that the auditor should identify as threats to independence any services related to preparing the financial statements other than those that we just talked about that are considered either impairment to independence or a threat to independence. So these services include recording transactions for which management has determined or approved the appropriate account classification or posting coded transactions to the audited entity's general ledger, preparing certain line items or sections of the financial statements based on information in the trial balance, posting entries that the audited entity's management has approved to the entity's trial balance, and preparing accounting reconciliations that identify reconciling items for audited entities' management's evaluation. This requirement is saying that if the non-audit service to be performed is one of these 4 services, that the auditor should identify them as a threat to independence and evaluate that threat for significance. So the fourth requirement related to preparing financial statements says that if the auditor evaluates the significance of a threat to independence created by providing any services discussed in paragraph 3.89, which was the previous requirement that I just read, and then they should document the evaluation of the threat, of the significance of the threat. So those 4 services I just mentioned were recording transactions for which management has provided, approval, preparing certain line items in the financial statements, posting entries that management has approved, or preparing accounting reconciliation for management's evaluation. So if any of these 4 services are to be provided, there is a threat to independence, and the auditor should evaluate the significance of that threat and document that evaluation. So to assist with this additional requirement, the Yellow Book has provided additional application guidance to help auditors evaluate the significance of any threats related to these 4 services. So the application guidance states that determining if the services are a significant threat, they should and require a safeguard. It is a matter of professional judgment, which isn't very clear, but they do provide 3 factors that auditors should consider when evaluating the significance of these threats. So the first factor that they should consider is the extent to which the outcome of the service should have a material effect on the financial statements. The second factor to consider is the degree of subjectivity involved in determining the appropriate amounts or treatments of those matters reflected in the financial statements. And the third factor to consider when evaluating the significance of these threats is the extent of the audited entity's involvement in determining significant matter judgment. So if the threat is deemed to be significant, then they would need to identify and apply safeguards to reduce that significant threat to an acceptable level.
All right, so as you can see here, there's a lot of documentation on the auditor. There's also a separation of the skills, knowledge, and experience of the client from the requirements of preparing a financial statement, having a separate set of requirements in terms of safeguards in addition to those skills, knowledge, and experience to oversee. All right, so let's keep pushing forward here. And here is that documentation in a very pretty picture form.
So kind of like we mentioned earlier in the flow chart for the conceptual framework for independence, when we got down to that bottom right-hand corner, it said to see figure 2. So this is what figure 2 looks like, and this is to illustrate the independence considerations for preparing accounting records and financial statements, which are those 4 requirements that we just discussed. So this flow chart really starts with that conceptual framework for independence that we previously went through. So if we started with that conceptual framework flowchart, the auditor would have identified a threat to independence that is related to a non-audit service. And then non-audit service was requested by management who has suitable skills, knowledge, and experience. And the non-audit service involved preparing accounting records and financial statements. After they have made that determination under the Government Auditing Standards conceptual framework, they would ask themselves, is the non-audit service preparing the financial statements in their entirety from the client-prepared trial balance or underlying accounting records? If the answer to that question is yes, then the auditor should identify and apply safeguards. So just a reminder that the safeguards are kind of the actions that the auditor takes that effectively eliminate threats to independence or reduce them to an acceptable level. So therefore, safeguards can vary depending on the situation. So notice here that in this flowchart, unlike the flowchart from the conceptual framework, it kind of skips the step where the auditor evaluates if the threat is significant and goes straight to the step of identifying and applying safeguards. So as I mentioned before, this is because the standard has told them that if the non-audit service is preparing the financial statements in their entirety, that it is a significant threat regardless of the situation. So there would be no need for that evaluation. So once those safeguards have been identified, then we would need to assess the effectiveness of those safeguards. If the safeguards eliminated or reduced the threat to an acceptable level, then the auditor should document the threats and any safeguards that were applied, and they will be able to proceed with the engagement. If the answer to that question is no, then the auditor's independence is considered to be impaired, and they should no longer proceed with that service. So now if we go back to the top, and the auditor has determined that the non-audit service is not preparing the financial statements in their entirety, then they would evaluate the threat for significance. So as I mentioned earlier, when the auditor does this evaluation, they should consider both qualitative and quantitative factors. So if the threat is not significant, then they would document that evaluation of significance in their audit work papers and will be able to proceed with the service. If the threat is significant, then the auditor would identify and apply safeguards and follow that same path we've previously discussed for a yes answer to is the non-audit service preparing the financial statement.
All right, well, thank you for walking through that. Let's take on the next line item here, and let's keep moving on as we're running a little short on time. This was the most important section, so we wanted to make sure we spent ample time on it. So why don't we push open this polling question, and let's take a look here. And the first one is, do you think the changes to independence will have an impact on your relationship with your auditor? And your choices are yes, no, and I'm not sure. So again, there is no right answer here. It's just your opinion as to what impact you think it will have as we have these changes to independence roles. So yes, no, and I'm not sure. All right. Looks like we have some good responses here, so we can end that poll and broadcast those results. And it looks like about 79% of you are saying, nope, should not have an impact on my my relationship. About 9% say it will, and 12% of you are not sure, which is not surprising here. All right, so let's move out of independence and let's move into our next topic. And here, what we're going to look at is peer review. Now, we're not going to spend a lot of time on peer review because the area here that we're going to focus on is just the fact that you're supposed to ask your auditor for a peer review report as part of a requirement of the Single Audit Act, but also as just a good corporate governance move to make sure that your auditor is performing quality audits. And so there's just a couple changes. We're going to give you a high-level overview of the peer review change.
The peer review standard in the 2018 Yellow Book has essentially remained relatively consistent with the prior year. The biggest change here is they've kind of broken it out into two sections. So the first section is audit organizations affiliated with a recognized organization. So these recognized organizations would be your AICPA, the Council for Inspector General on Integrity and Efficiency, and all of those organizations. And then the second category is audit organizations not affiliated with a recognized organization. So that first section that I mentioned is the peer review standards for the requirements and application guidance for audit organizations affiliated with the recognized organization. So the GAO simply states that the audit organization should comply with the requirements of those respective organization's peer review requirements, plus do a couple more additional requirements that are specific to the generally accepted government auditing standards. So these additional government auditing standards requirements are a selection of the GAGAS engagements. So they're saying that within the peer review that they should select at least one engagement conducted in accordance with the government auditing standards. They've also provided some additional requirements related to the peer review report ratings. So the ratings in a peer review report that you could get is a passing rating, a passing with deficiency, or a failed rating. So the GAO has provided guidance in there on how to evaluate and determine which rating to provide. And then the last one, which we should be familiar with, is the availability of the peer review report, just making sure that that peer review report is available to the public. So that second section that I mentioned is audit organizations not affiliated with a recognized organization. So this is kind of the newer section that was added to the Yellow Book this year. The first portion of the requirements are the same as we just discussed for the audit organizations that are affiliated with recognized organizations. And this is to make sure that the peer review team selects at least one GAGAS engagement, the peer review, they go through the peer review reporting and the availability of their report to the public. There's also a couple of additional requirements that are here for organizations not affiliated with a recognized organization.
All right, I think this is another area where a lot of you will have an interest, which is the topic of waste. It got a lot of attention when it came out in the exposure draft, and we want you to be aware of what the definition is and how it could apply to your audit. So take it away.
So what the biggest change here was related to waste is that the standard actually provided a definition for the word waste, along with some examples in the application guidance that were not previously included in the old Yellow Book. So the old Yellow Book only addressed the issue of abuse, and it did not provide anything on waste. So as you can see on the screen, the definition of waste that was given is the act of using or expending resources carelessly, extravagantly, or to no purpose. Waste can include activities that do not include abuse and does not necessarily involve a violation of law. Some examples of waste that were provided in the application guidance are making travel choices that are contrary to existing travel policies or are unnecessary, extravagant, or expensive. Another example that was provided is making procurement or vendor selections that are contrary to existing policies or are unnecessarily extravagant or expensive. So to kind of distinguish between waste and abuse, the standard defines abuse as a behavior that is deficient or improper when compared with behaviors that a prudent person would consider a reasonable and necessary business practice given the facts and circumstances. So to help you distinguish between the two, some examples of abuse that are provided in the standard are creating unneeded overtime, requesting staff to perform personal errands or work tasks for a supervisor or manager, or misusing the official position for personal gain. So kind of that difference here is that abuse is related to improper behavior of someone, where waste is the act of carelessly using resources.
And we think this is important for you guys because if we have, as an auditor, identified abuse and waste, we have reporting requirements related to them. So if the auditor identifies wasteful spending, it actually is something that can have an impact on your Yellow Book report. It can also have an impact, abuses both in the Yellow Book and in the uniform guidance. And so these are things that if we come across them as the auditor, will make it into a report at the end of the day. All right, that brings us to our next polling question. And here the question is, do you agree with the reporting of waste? So do you believe that the auditor should report back waste that's identified as part of the Yellow Book audit? And so your choices are yes, no, I'm not sure. You know, I've heard pros and cons on both of these. I've heard some people say that it's too subjective and that it shouldn't be in there. And I've heard other people say that it's, you know, a lot of times this is public dollars, federal dollars, taxes, and that they feel like reporting of waste is appropriate because of the public benefit aspect of being a nonprofit or a government who are subject to these Yellow Book standards. So there are, you know, various ways that people look at this, and there isn't a right answer. All right, it looks like you guys have voted, so let's close out that poll. And 71% of you actually said yes, that you do agree with the reporting of waste, and 21% were not sure, and only 8% said no, which is a little bit higher than I expected in terms of that 71%. Typically, I see that closer to a 50-50, so our attendees online here are excited about the opportunity to have the auditor take a look at our spending, which is awesome. Okay, so let's keep pushing through here. And again, another topic that will not impact you directly. And so we're not going to spend a ton of time on it. Just want you to be aware that there are changes that are happening in terms of format. But again, because our clients are not subject to it, just the auditor, we're going to just give you a super high level overview here of the CPE requirement.
Like Melissa mentioned, there was kind of a change in the structure. So originally the GOA kind of had this separate standard that was issued that was called the Government Auditing Standards Guidance on GAGIS Requirements for Continuing Professional Education. So this was last revised in 2005, and kind of what they did was they removed this additional standard and they put it within the Yellow Book instead of having two separate standards. I had mentioned earlier that most of these requirements haven't really changed in themselves. It was more just of the structure and the outline that they provided this information. So just so you guys know kind of the CPE requirements that your auditors are supposed to abide by is they're supposed to have at least 80 hours of CPE in every 2-year cycle. And of those 80 hours, 24 hours have to relate to governments and government auditing, and 56 hours relate to enhancing auditor professional expertise. And on top of that, at least 20 hours of CPE have to happen within each of the 2-year periods.
All right, so that brings us to our last polling question of the day. And so again, just to get a little bit of feedback for you guys, but as we talk about effective date here, and we're going to talk about why this is so important, we wanted to know what your fiscal year end was. So the options that we're giving you are March 31st, June 30, September 30, or is it December 31? So what is your fiscal year end? I guess I probably should have had an other, because you could have another year end. We do have a few clients who are universities who have a May 31 year end, so I guess that could be an option here as well. But in that scenario, just what is your year end? Because that is going to have an impact on how this will impact you. All right, it looks like y'all have voted, so let's close out that poll. And not surprisingly, about almost 80% of you have a June 30 year end, followed by September 30 and December 31. So not surprised by that at all. And so in this scenario, not surprising is that we do have a lot of June 31. That's going to be very important as we get into the effective date. So let's push forward here.
So the effective date for this standard, or for financial audits, attestation engagement, and reviews of financial statements, is for the period ending on or after June 30th, 2020, and for performance audits beginning on or after July 1st, 2019. So for your June 30th year end, this is going to be for June 30th, 2020. For your September 31 year or September year ends, this is going to be for September of 2020, and for your December year ends, it's also going to be for December 2020. This standard cannot be early implemented, so this will be effective as of those dates.
So one of the reasons why we asked you about your fiscal years is that because if you look at the June 30 year ends that most of you have here, the way this works is that the auditor has to be independent for the whole year under audit. So while it looks like the effective date for this is actually really, really far away, because of the timing, they have to be effective on day one of that fiscal year, even if it's not going to be a report until the following year. So for that process, and I guess if you could just share your PowerPoint one more time, Megan, we're not seeing it on the screen here. It's very important that you think about that in terms of if you're having a change in your relationship or the non-audit services that your auditor is going to provide you, it's going to be something to think about this spring. Because if you have a June 30 year end, starting July 1 is when they're going to have to make these independence changes so that they're independent for the entire year. So your fiscal year is really, really important as we're going through this process. All right, so let's push on here. We have a question that's popped up that's very particular to an entity, and we're going to take that one offline so that we can make sure that we talk about that as a, for an independent person here. So I think that's a very important topic, but we're going to address that one offline. I think we've addressed all the other questions. I still don't see the slides, however. I'm not sure if y'all see the slides, but I don't.
That's fine. Does that work?
No, but I still don't see slides.
In any case, that was the last slide, so I apologize. I'm not sure why it's not working.
Okay, that's fine. So one of the things we want to do, obviously, is there's a great comment asking here about CPE, continuing professional education. There's just certain requirements that we have to, as auditors, show in terms of our knowledge, skills, and experience for doing the audit. We have to take certain CPE classes. They are specific to the auditor in order to provide these services. And so we will make sure that all of our Cherry Bekaert staff, we do have a great monitoring system to ensure that we are tracking that and we are getting our Yellow Book CPE before we go out to the clients. All right, so that is super duper helpful. All right, so with that, I want to thank Megan for taking time out of her very busy schedule to put together your slides that you saw here today and all of the preparation she had, and also the learning team for putting together this process. So I think that we have addressed all of the questions that are in the chat pod here, and so we are grateful for having you guys on our webinar, and we hope to see you on a future webinar. Thank you guys so much. Have a great day. Bye-bye.